got to pause at 11:10 for about half an hour. We're just going to take a quick break at 11:10 for like 30 minutes, give or take. All right, just sorry about that, but there's no way around it. So, okay, so, and obviously, since this file is a purchase, I always told you to look to see for the rent and make sure the borrower's, been renting. In this case, they've been renting for 3 years. So you need, policy, like we covered before. Policy states that you need 12 months of rent history. So you need either cancel checks or statements, whatever, anything to show that the verification of rent. Okay? So because the borrower is currently renting, and this is the address for the rent, present address. Okay? Borrower 1, which is John, he is an owner, so he's self-employed. He's been there for 5 years. 5 years in the line of business. It's called Anytime Research. Jane is W-2 wage earner. She's in sales for 8 years. And again, she works for Anytime Sales. Like I said before, just be careful because there are cases where they give you 2 different jobs. And one job doesn't have the 2-year history because policy requires that you need to have a 2-year history. But the second job, you're going to see that the start date and end date, it's not 2 years from the application date, which in that case, you would not be able to use that income. So just be on the lookout. With regards to your proposed P&I, as soon as I see that, that's question number 1 on your test. So question number 1 is what is your principal and interest? The proposed, it's right here, $3,755.86. I go ahead and write it up immediately. If I forget, I'll put it in my Ricado.
One thing I want to remind you guys is that I think in every group of test cases, there is an interest-only loan. So make sure that you're not taking the P&I payment from the 1003 on your test cases if you come up with an interest-only loan. In those cases, you have to calculate it.
Right. Good point taken. And obviously, when you get into the interest only and all that, whether it's, conforming or non-conforming, you have to go to the policy because also your reserves vary significantly. So depending on whether you have conforming or non-conforming interest only, the reserves change. So you have to look at the policy. Which you have, I gave you all the policies on the job aid. You have all of them. Alright. So, moving on. I look here for the employment. Both borrowers, supposedly all they have is just base pay. They're not declaring or they're not using any overtime or bonuses. But, obviously we have to validate it. And they're using $5,000 for a deposit. And then Diversified Financial, they got $475,000. That's the brokerage account that they're talking about here. That's for that coming from the assets, the brokerage account. Alright. Then same scenario as before. When I get to my liabilities, I go ahead and I put my credit report next to it. So let me look at my credit. I'll put up my credit report. Move it over. also paid on time. And then we have Ford Motor Credit, which is closed. But this account was 60 days late. All right, 3 times. So, we got an issue there with the auto loan, but it's closed. And it's zero balance. But we still need to address it, right? Because remember that we said that anytime you have, even if it's zero balance, policy states that if the balance is greater than 5,000, that you need to pay it at closing. That's per policy. But in this case, that has zero balance, but you still need a letter of explanation to find out what happened with that motor credit account. Okay. And then you have Anytown Bank, which is also closed, but the account was also 60 days late. So, our policy clearly, and let me pull up the policy so you guys can see it for the regulatory credit. I think I have it open. Should have it open. Yep. So, the policy for derogatory credit, and again, I just went into the live derogatory credit link that I gave you, and I just searched for, when I went to search, I just put major, and this came up. So, what establishes major derogatory credit? There are several accounts showing recent late. If they're multiple, 60 or 90-day late payments, that is considered derogatory credit. In this case, we already seen that we have 2 that are 60 days late. So this account is major derogatory credit. Obviously, the issue with major derogatory credit is that we cannot approve a loan with major derogatory credit. So this file is heading towards a decline. Also, if there's any 90-day delinquency within the last 12 months or within the last 36 months with a balance of $5,000. So keep an eye on that, because if you're going to see that we have an account that is 90 days late in the last 36 months and it has a balance of $5,000. So it's also major derogatory credit. Obviously, this case is, decline. The one thing is, same thing for SASE and same thing for your practice cases, not practice cases, but your live files. Even if the file is a decline, you have to underwrite the entire file. So you have to underwrite her like if it was going to be an approved file. You have to put your conditions, you have to go through the whole process, even if it's a decline. Okay, so let's look at
Juan, I have a quick question.
Sure.
So when we're reviewing the derogatory credit and you have rolling 30s, does the Bank of America consider those a rolling 30, or is it each occurrence?
You mean for each particular credit card, or?
No, I'm
No,
saying if
she's
you have
talking about if a borrower rolls their 30-day late. It doesn't turn into a 60, but they're 30 days late. They make their payment, but their second payment's 30 days late. So they make their payment, and their third payment's 30 days late. That's rolling.
Right.
And yes,
Well,
Bank of America does consider those individual delinquencies.
Okay, thank you.
Yeah, and they have on one side, the left side is minor derogatory credit. Late payment does not extend beyond 1 month. The number of delinquent account is not large in relation to the overall credit. The credit history does not show multiple revolving accounts with high balances. The credit reflects the mortgage qualification. All credits have been paid as agreed. So, pretty much it gives you what major is, minor and major. In our case, obviously, so far we have major derogatory credit. So let's continue looking at it. Alright, so this is, again, 60 days late. Allied Bank is closed. That was paid on time. We have Sam's Club, which is also been delinquent 30 days, several times. And that we have 5,000 or more. In this case, we do have more than 5,000. It's 5,020, as you can see there, and it's been delinquent 90 days. So that's major derogatory credit for sure. So for that, we need an LOE. You know, we're gonna go through the conditions that we need to the whole thing. We still have to go through the whole process. Right. And I don't think we have anything else there. We have Visa, which is closed. Wells Fargo, which is closed, which is also late. Regions Bank is closed. Fifth Third is closed. And again, I always told you to scroll down and look at the information on the credit report. So here, inquiries. On the last one, we had an inquiry. On this one, we don't. Everything is just approved vendor. This is the application date. Like I said before, we pulled 3 credits: Expedient, TransUnion, and Equifax. That's what it is. That's just for the application. The address matches what we have. Don't stress about the AKAs or anything to do with AKAs. But the public records I told you to look at, you're going to see why. Here we don't have anything, but here we are. Public records. Remember I told you you're going to have one with a tax lien? There's a case that also has a tax lien just like this one. So you have a federal tax lien. This is from the IRS, the Internal Revenue Service, which is $32,189. That's also major derogatory credit. So definitely this file is declined, but we still have to go through the whole process of underwriting it thoroughly, like if we were just reviewing it for an approval. But I'm going to make a note of that IRS tax lien. That's a big deal. Because the IRS tax lien has to be paid prior to our closing. So you got to come up with that money. You have to have money in the bank to pay that, and you have to pay it prior to closing, and you have to show proof that's satisfied. Alright. So let's see what we have.
You also have to show proof that it's been released, not just satisfied on a tax lien.
Got it. Let's see what we put in here. Let me look at my RECACO, see what I put in the RECACO. So for credit, so far I have put that Best Buy 2720 is major derogatory credit. Delinquency in the last 90 days with a balance of 5,000 or more, which you saw it on the policy. Then you have the tax lien, which is a major derogatory credit, and public records. And then the conditions that we put for the tax lien was an LOE, proof of payment, and the release of the lien. That's what I'm saying. And then for the other ones, we needed the Wells Fargo, the one that was 1 times 30. We need an LOE and supporting documentation for the following delinquent debt. We saw the Wells Fargo was late. That's the first one that was late. The Ford Motor Credit was also late, 1 times 30. Anytown Bank was also 1 times 30. Sam's Club, Best Buy, and Wells Fargo. So we need a letter of explanation for all those. Obviously, the decline, but you still have to condition for that. And then from there, I usually just look to see if I have any LOE. See what else I have. I usually just jump right into the assets. So let's look and see what I have for assets. So again, this is the brokerage firm for Diversified Financial. This payment is from April 1st to April 30th. This is an account that's as of 4/30/2019. So, obviously it looks like it's a new account. It's as of that date. You're gonna take the ending balance for this account. That's what you're going to use for. So the ending balance for this account is $479,900. 999.38. Since it's an investment account, you're going to use 70% of the total ending balance. But before we do that, we have to review the account. Like I said before, make sure you don't have. We talked about, whether is everything is been exercised as far as if you have any outstanding warrants that have not been fully exercised, or if you have any margin loans that you need to take out. Again, borrowing on margin, this is a broker account. So basically what it is you're using your own funds, or you're leveraging more than what you already have in the account. So you're borrowing against the cash that you have in there to buy and sell stocks. But, you get a Fed call when the market drops. So obviously it's very risky, plus you're paying yourself a monthly amount on that loan. So here we have opening cash funds, cash related, short-term gain or loss, the capital gain. So outstanding. So here we are, margin loan balance. So we have a margin loan. So we have a margin loan for $3,820, and you have a margin loan payment of $125. So obviously, since I have this margin loan of $3,828, again, borrowing a margin, it's like you're over leveraging your account. So it's not your own funds. You're basically borrowing on those funds. So from the balance that you have of $479, I have to deduct first the margin loan. I have to take 70% of this amount. Then I'm going to take out the margin loan. So I'm going to take the ending balance so far, which is $479,938, multiply it times 70%. Then I'm going to deduct the margin loan, and I'm going to add the margin loan payment of $125 to my liabilities. That is an undisclosed liability that I didn't have, but now that I see it, I have to add it in order to get the correct back-end DTI. Any questions so far? Any questions? Here what they have is just the holdings that they have, just stocks, the warrants, nothing crazy that we need to address here. It's just stocks that they have on the account. You still have to go through it and make sure you have all the pages. All 7 pages are okay. Any questions on the asset at all? Then obviously when I do my calculation, I'll show you again. I'll show you. I'll take my ending balance at 70% minus the margin loan, and then I'm going to put it that the total amount of available funds can be used for the transaction. I have to calculate it at 70% of the outstanding balance of any margin loans, minus any margin loans. For non-conforming transaction in which investment account reflects the margin loan, and the asset is not used for income qualification, the following applies. Provide the following: a payment amount associated with the margin loan should be included in the liability. I'm saying you're going to add it to your DPI, back in DPI, and the balance of the margin loan must be deducted from the qualifying asset amount, which we already did that. So, in addition to that, I got to take out the $32,189 because I got to come up with that tax lien that I have to pay it prior to closing. So actually, my qualifying assets that I have are $299,990.57. Again, the margin loan, the ending balance on the account at 70% minus the margin loan minus the taxes. Okay. And obviously, the conditions that I would need is I need an additional statement because, like I said before, policy requires 60 days, 2 months. I only have 1 month. And I also need the terms of withdrawal, right? Proof of the liquidation. So I need to make sure that, you sell some of that stock to cover, how much you need to bring for closing, the $212,000. So, because right now, all of it is in stocks. So I need you to liquidate, proof of the liquidation. You need to sell whatever stocks you have to come up with the amount that you need for closing.
There's a little bit of a delay with the WebEx screen, so you're a little bit ahead before we're able to see what you're talking about on your screen. Well, for me, I don't know if it's my internet. If you can just give like a little, some seconds, and that'll be there. Thank you.
Then the next thing I'm going to look at is I'm going to look at the rent payment. I always tell you most of the accounts I told you last time, you're gonna be missing, for most of the cases, you're gonna be missing 3 checks. In the case they give you all of it, I haven't seen one where they do this and they give you all 12 months. Usually it's gonna be it's gonna be 2 to 3 months that you're gonna be missing, because you need 12 months of canceled checks. So here we have 6/1/2018. The next one that we have is 7/1/2018. We have 8/1/2018. 9/1/2018, 10/1/2018, and then 12/1. So obviously we're missing already from 10 to 12. I'm missing 11, right? So I'm missing 11/1/2018. So I'm going to make a note of that. That needs a condition for 11/1/2018 so far. All right. Then 1/2/19. So from 1 to 3, so obviously I'm missing February 1, 2019. So I also need a condition for that, for February 1, 2019. I got March, and I'm missing April, because it goes from 3 to 5. So I'm missing 4/1/2019. Should be 19, it says 18. Alright, so I'm missing quite a few months. Those are the months that I'm missing, the 3 months. So obviously when I go into my liabilities, let's just look at my liabilities. I need to condition, obtain the following documentation, cancel checks for the month of 11/2018, 2/19, and 4/19 to complete the 12-month history. And documentation to substantiate the terms of the rent, such as a scheduled lease. I need that as well. So those are my conditions for this cancel check that I have here.
I have a question, because I marked down 10/18 as well, but that was because the cancel check part was different than all the rest of them. Was I reading too much into that?
Yes, definitely.
Okay, thank you.
For real live files, no, but for your SASE test cases, yes.
Yeah, the lab files are like actual, you're going to see like, it'll look more like actual checks that are like already been, with the little code at the bottom, like you usually see it, they've been cashed. Like actual accounts, not just make believe. So, what else do we have here? Let's look at the title real quick, so we can do our PITI calculation. Alright, so for my title, I have a purchase contract. Here. I took it from the title report. Your title report, you have your installments right here. So you have 2 installments. One installment for $5,800 and another installment for $5,800. So all I did, like you can see here, I just took $5,800, the 2 installments divided by 12, and I got $966.67. Does that answer your question?
Yes, thank you.
Well, alright guys. So again, let's just take a quick break. We'll come back at 11:45. And don't get out of the WebEx, don't hang up, just put everything on mute, and we'll be right back. Thank you guys.
problem.
Self-employed borrower, and Jane, I believe, is the W-2 wage earner. So let's look at Jane. What's this? Alright, so, like I said, every time they give you a verification of employment, for you guys, I need you to definitely look at your verification of employment and make sure that, the hire date, at least, they have 2 years of employment there, which in this case is 2011. The same type of business they declare in the 1003. It has to be employed. It has to say that they're currently employed. This case says yes. So once you see that, we're good. Then, the next thing is determine the pay frequency, right? So this pay stub is from 4:30. The next pay stub is from 4:15. So obviously, this is, it's not bi-weekly. It's semi-monthly. The amount that we can see here is $1,500 semi-monthly. So this income will be calculated by taking the 1,500 times 24 and dividing it by 12. So that's what I would do if I look at my Rikeiko here that I put for the income for Jane. That's what I did. Jane, I took the 1,500 times 24 and divided it by 12, which gives us $3,000. Obviously we're not going to end there. We're going to look at, the whole pay stub because this reflects bonuses. They didn't say anything about bonuses on the 1003, but we do see it on the pay stub. So we got to determine if we can use it or if we have to. I always said to look at the deductions. There's one case that has like a garnishment that we talked about that you're going to have to add that garnishment back. In this case, we have a A-Town credit union loan repayment. So we do have something that we need to address, the 6250. And the way we would calculate that is we would take that 6250 times 24 and divide it by 12 and add that amount to our liability. So that's an undisclosed liability that we just found. Okay. We also see, look at the next page up to determine it. We do see bonuses again here, and here is that, undisclosed liability again. Alright. So as far as the income for the borrower, we need to look at the 1040, we look at the W-2s. So we have for 2017 for Jane, we have 47,830, and for 2018 we have $36,000. Obviously, just on that amount alone, I can tell you that we cannot use the bonuses because we don't have a 2-year history. Clearly, why do I say that? Because we just said that the base pay is $1,500 times 24 divided by 12, which gives us $3,000. $3,000 times 12 is $36,000. So if the borrower made $36,000, which is what's reflected on the W-2, there's nothing left here for bonuses and overtime. The prior year they have $47,000. So obviously they had about $10,000 or $11,000 in bonuses. This year, it's just the base pay, $36,000. So that's why I put here, unable to use the bonuses. We don't have 2 years of continuing. 2017 obviously does reflect bonuses because it's $47,000 and the base pay 36. So if you take from the 47, the base pay of 36, that gives you about $11,000 in bonus. 2018, we don't have any. So we don't have 2-year history, so we cannot use it. Alright, so pretty straightforward there. Any questions on that? For bar number 2, this is John. Same thing, we're going to look at, the verification of employment, how long we've been employed. They're self-employed, so there's nothing else to look there. Make sure that everything is correct. Let me look at the 1040s. So the income from the 1040, because this borrower is self-employed. So for 2017, let's look at 2017 first. didn't have a profit of $90,832. We're gonna deduct our non-recurring income, which is $1,500. Where is that at? So let's look at it, doing it from the tax. Let me pull up the tax. It's probably easier for you guys to look at it that way, and having to find the information here. So let's just pull the tax. That is the tax already. Here's the tax for the income again. When same as we did before, the first thing you gotta do is you have the little three little dots on the tax. You gotta put that information first, so it populates the borrower information. You're able to do this. Once you find that information, you go to Schedule C, and then you put your information for the Schedule C. Let me do it from scratch instead of just showing you here. Hold on. Open up the tax itself. But again, you should be able to calculate it manually first. One second, guys. I'm sorry. Let me go to that still so that people don't come back to me anymore. Alright. Okay, it's opening up. So here's the tax. Again, if you're using, when you get here, if you're doing a WIC, you will create search for W2. We're doing a tax, so I'm going to create search for taxes. If it was W2 wage earner, WIC, will be create search here. We're doing self-employed, so it'll be a tax, so it'll be create search. And then just put whatever number. And search, and you're going to do the correct years, because what we have here is, I found one just with the same number, so let's change it up there. Yeah. We're going to change the years to 2018 and 2019. And the first thing you're going to do is you're going to go in here and you're going to put the name of the company, which I believe the name of the company is Anytown Research. So you're going to go in, select the two little dots, it's the borrower's name. So it's going to be John. Again, here's where you will put your test case number, because you're not going to remember. If you don't put your test case number, you're not going to remember. I guess in this case I'm going to call it practice case 1. So always change the middle name to whatever case you're working on, because all all your bars are gonna be Jane Doe and Jane Doe, John and Jane. You're not gonna know which is which. You're gonna have to go one by one. So once you put the name, then we'll put the income for our Schedule C, which is under Schedule C, Section 8 down here. Come on, where are you? Let's do a Schedule C analysis.
Hi, there's still some delay, so like I'm still seeing the page where you entered the name for John and Jane, for John Doe.
Okay.
So you're a little bit ahead.
So once you hit that information, you hit save. Always save it as you go along. Then you're going to go for the Schedule C analysis. So it can allow you to enter the information. So you're going to hit Schedule C, go, so you can get to the Schedule C analysis. You're going to do, our years are 17 and 18, so obviously you got to make sure you put 17 and 18 and 18 and 19. Because we no longer have 17 and 18 as a selection to drop down. I think it's just 18 and 19. So you're going to put this information for 17. You're going to look at your tax returns. You're going to look at line, so I can minimize this, put it side by side. Let me pull up the taxes over here.
Hi, so from the part where you entered the borrower's name, I didn't see how you were able to populate for all of the lines to come up like this. I probably missed
You
that.
hit save. You hit save. Yeah, if you listen, you hit save, and then you go to the Schedule C, and it populates the Schedule C form.
Okay.
You have to hit save first, after you put the name. And then go to Schedule C and hit go. Hit this go button, after you save it. So save
Okay,
first,
thank you.
then Schedule C and go here. And then, like what I'm saying is, you see here 18 and 19, but the information that we have is 17 and 18. So the information for 17, you're going to put it on the 18, and the information that we have for the taxes for 18, you're going to put it on the 19. So this thing tells you to first start with our net or loss profit. In this case, line 31. It tells you where to go. I mean, it tells you right here, line 31. So it's 90,832. All right. In this case is a profit. So I'm going to put positive number. 90,832. It's not a loss. If it was a loss, I would have to enter a negative. Okay, 1 second. It's still building. So the next thing that we have is automatically, defaults to do is you're going to subtract that amount, so it's going to put it in red. Because you got to subtract the non-recurring income that we have here, which is on line number 6, $1,500. Then you're going to take your depletion, which is line number 12. We don't have any. We're going to add depreciation, which is line 13. It's 4,538. We're going to take our meals and entertainment, which is 24B, which is 1,280. And that's going to get subtracted. 24B. Again, it tells you where to go right here. Business use a home, that's line 30. We've seen that before. This is $1,200. Put that off there. It's going to be added. The amortization and casualty loss tells you to look at, it's right here on this page, line 28. But it tells you, definitely confirm it. Because it's $1,800. We don't know. It's just other expenses. So we need to look at the schedule, right? So part 5, it does clearly says $1,800. I don't know if you guys remember the other case that we did, where it had a bunch of things here, like the one that had reimbursement for the car, legal fees, a bunch of other things. But this one clearly says amortization. So definitely we're going to use that as $1,800 for the amortization and casualty loss. And then for the mileage, we said before that the first thing you need to do is look at line 9 to make sure they have a car and truck expense. But then you have to go into section 4 to look to see what they have. In this case, they have 12,180. Right? And in here, it tells you the WIC. If you scroll over, it tells you what to multiply it by. If you hover over the little arrow, it tells you what mileage to use. So right here, it's telling me to use 24 cents for 16, 27 cents for 17, 25 cents for 18, 26 cents for 19. So obviously, I'm going to use 25 cents because that's what I have for 2018. I'm going to take my 12,180 and then multiply that times 25 cents. Okay. That is depreciation. All right. So that's basically, here it spells out the information, the same thing that I'm doing here. Okay, so that gives me 3,045 for my depreciation. Then same scenario, we'll look at the books. Then, according to the tag, it tells us to go to line number 3, which is what we have for the gross receipts. So the gross receipts, we have 122,231. Then we don't have any custom goods sold. That's line number 4. That's empty. Line 28, which is our total expense. We have 31,669 or 699. Sorry. And then our combined taxable income, which is line 31. Again, the taxable income is in line W, 9,832. So, once you do all that information, it pretty much calculates what income you have once you do the same thing for year 2. So you have to do the same thing for 2018. So for 2018, instead of 2018, what we have for our Schedule C, or 2018. I'll just look at 2017. thing that I forgot to do, guys, that I should have done when I started this thing is put the name of the business, which in this case is Anytown Research. Forgot to do that. Just realized that was missing the name. Okay. Then we're gonna go look at our line number 6, which we don't have any non-recurring expense. Art depreciation, or depletion, I'm sorry, we don't have any. Line 12. Depreciation, we have 2,321. Put that in there. Meals and entertainment, which is 24B, we have 1,310. If you forget where to go, it tells you right here.
Mm-hmm.
For the business use at home, which is line 30, right here, $1,200. Put that out. Our casualty loss, which is 27A, we have $1,700. But let's see if we have that as amortization. Yep. And it clearly says amortization. Again, you can't just take it from this line here. Like we've seen before, there was one case that we had a bunch of things in here. It was like $2,000 and $2,500. But when you go to the schedule, there was other expenses, nothing labeled amortization. In this case, it's telling you amortization, so we can definitely use it. The same thing for your meals and for your mileage. You first have to make sure you have car expense on line number 9. Then you go to part 4 and see what you have. We saw that the schedule told us you use 25 cents, for year 18 right here. So that's what we're going to use. So we're going to take the 1144, multiply it times 25 cents, and that gives us 2,761. Then we're going to move on to our gross receipts, which is line number 3. We have 125,000. 1.2. We don't have any custom goods sold. Total expenses, which is line 28. We have 31,666. And then we already calculated. We already had line 31, which is our taxable income. We had it as 92,246. Alright, so put all that information in there. Once you have it, then save it. Hit save. So your data has been saved. And then what you do is you go back to your 2-year tax. Select 2-year tax. Then it takes you to populate your information here. Let me just make this big. So we should get 83,1471. Let's see if we got that. Again, once you do that, it'll populate the information of the 2-year tax. It'll tell you Anytown Research, which is the name that we put, and it's the same amount, 8,315. So we know we did it right. Because manually it came out to the same amount, 8,315. So when we did it manually, basically all we did is we took the same thing, 2017, the 90,832 minus the non-recurring expense, meals and entertainment, plus depreciation, plus the business use, minus the casualty loss, and then obviously took the mileage, and gives us an amount. Same thing for 2018. That's how we did it manually. We just put a little note here that the mileage was based on what was given, the car expense. So pretty straightforward. So now we got our income. So for borrow 1, we have 8,314, and for borrow 2, we said it was $3,000. So our total income is 10,664.71. But now that we have that, we can calculate our PITIA, which obviously we calculated it right here. Our DTI, which is 5,505, divided by our total income, 4393. 4693. You're not going to answer 4693. You're going to answer 47. If this was 47, liabilities, pretty much we don't have anything else. The only undisclosed liability that we had was the credit union that we found in the pay stub, the one that was $62.50. Since it was paid semi-monthly, we had to multiply it times 24 and divide it by 12, which gives us $125. So my total liability is $702. So now I can do my back-end DTI, which is my PITIA plus my total liabilities. My PITIA plus my liabilities divided by my income, which gives me 54.08, which is 55%. That's my DTI. And obviously for this type of, the max DTI was 55, so the DTI was not an issue. I think the program was 43% max DTI for this program. Obviously, the DTI is out of line too. So that's another issue with this file. It's not going to get approved. But we still have to go through the exercise. So now that we calculated our income, the only thing that we have left to do is look at our appraisal. So let's look at the appraisal. Any questions so far before we open up the appraisal? Any questions at all, guys? Okay. So for our appraisal, always look for, especially on a purchase, always look at the owner of public records and make sure that this people match the person that's doing the purchase contract, the sellers. So the seller in the purchase contract is John and Jane Seller. And then the owners of records are John and Jane Seller. So we got no issue there. People that are selling the property own it. We're good. Again, there's a case out there that the person selling it is not the person that owns the property. Like the person on the purchase contract, it's somebody else, and then the owner of record is a different name. So obviously that's a problem. That's a red flag. Make sure you have your legal descriptions. In this case, we do. Make sure the APN number is correct. This one matches the title. The other one, remember, they had like ABC, and the title had like 1, 2, 3, 4, 5, 6, 7, 8. Obviously, it has to match what we have on title. In this case, it does. Nothing to worry about here. In this section, obviously it's a purchase contract. So in this one, the one that we have prior was a refinance. So this was not completed, and they don't have to complete it, this section of the contract. Since this is a purchase, they do have to say, I did analyze. They got to tell you the contract price, the date of the contract. They got to fill out this information. In the event that you have a case that is, and I always look here, in this section of the foundation, I always keep an eye, to see if they check that we have infestation or dampness or settlement. Here we have nothing marked. So, I don't have to have any issues with the property itself. Usually, if you have an issue, you'll see it here, and then that just points out to okay, I'm gonna need something about the infestation, or if you have the foundation that's failing, we might need an inspection, and you have to look at that. It tells me it's a detached PUD, so this is a detached PUD. Detached PUDs do not require approval, only attached PUDs. The attached ones do. The detached do not, per policy. That's the policy that I gave you for appraisal. So you don't need pro approval. Like in the other one that we have was a condo, so we need a pro approval. On this one, we don't need pro approval. Project Review Office, that's what PRO stands for.
So I'm sorry to keep harping on it, but so when I went to the Solution Center, it said that if it didn't have that, what the highest and best use was, that it was ineligible for financing.
Okay.
Do you see that on here where I didn't see it on this appraisal? Does it say that on here?
So on the appraisal,
Yeah. Where did you see that the highest and best use was not indicated? Oh, I see it. It's right there. Yep, actually that is something that they should, I don't know why I was thinking of the percentage of different types of property, when you said that. I don't know why I was thinking this, but yes. It should indicate here, yes. I haven't seen any of the test cases that don't.
This is the same. That's a good catch. I didn't catch that one.
No, I didn't catch it either.
I'm so sorry. I'm not trying to be difficult. I just want to make sure that
No.
No,
Please. Not difficult at all. Ask questions. I mean, if it's something that's wrong and we need to address it, definitely got to point it out. So, no, not at all. All right, it's a good point. It has to be checked.
Yeah, there has to be something there.
Yeah, they're not checked. It's a good catch. Okay. The overall condition is it's good condition. There's no issues. Any physical deficiencies? Again, are there any physical deficiencies or adverse conditions? That's going to be a test question. In this case, the answer will be no because there's nothing. Make sure you check all of it. For quality and conditions, they should be comparing the comps. Should be the same quality and condition as our subject property. If it's not, they should give adjustments. Or if the property has covered garage or an extra something, you need to provide that extra. Like this one has a pool, so they give an extra $15,000. Fireplace, whatever the case may be. You gotta give adjustments to that. But most of the properties are within 5,000 square feet, 4 bedrooms, 3.5 bath, or 4 bedrooms, 4.5 bath. So no issue there. The adjustments that we talked about here, we should not over 15 and 25 for net and gross adjustments. In this case, we don't have anything net over 15 and 25. Make sure that the value, for this property being $900,000, that the value is bracketed and supported. In this case, it appears to be. So you don't have any issue there. The properties, as far as has the property, we talked about, any transfers. If it's been transferred for the subject property, it's 12 months and 36 months for the comparables. So any transfers for the subject properties in the last 36 months, I need to know. If you give me a date here, I need you to give me a price. You can't just give me a date and no price. So if you give me a date that this property was, sold in the last 36 months and you give me a date, I need you to give me the price of the sale transfer. For our subject property, it was transferred on 5/18, 4/17, and 8/16. They just give me the prior. So I need to condition for the other two. So what did it sell? What did the property sell in 17 and 16? Because you're only giving me the prior one. What about the other two? What did it sell before that? So that is a condition that we need to do. So make a note. We need to put that as a condition. Because it's just telling me on 5/18 that was sold for $890. What about 4/17? And what about 8/16? What did he sell for? I need you to give me that. Because it's for the last 18. For the last 12 months, right, Linda?
Yes, for the comparables, 36 months for the subject.
Right. All right. And there's the value for property, and that's $1,000. This. So nothing subject to repairs. So far, no issues. And again, like we talked about in the other appraisal that we went over, condition for additional things. Look at all the comps. In this case, we have 6 comps. So you need 6 pictures of comparables. Review the comparables the same way we did with the other 3. Look at the quality. Look at make sure that everything matches. Make sure that there's no crazy adjustments. If you have, the site issue, in this case, we don't have a site. The PUD. But, make sure you look at the whole, everything, and make sure there's no issue there. And make sure, again, that you look to see the 4, 5, and 6 were sold. In this case, there weren't. There's no conflict. No traffic. With regards to the pictures for exteriors, like I said, all you need is front, rear, and street scene. Nothing else. There's your front, there's your rear, and there's your street scene. So my outside pictures are done. Inside, main living area, kitchens, bathrooms, and any physical deficiency. That's it. I do not need pictures of bedrooms. Do not condition for pictures of bedrooms. So you got the pool, you got the pool house exterior, pool house interior, foyer. Got my kitchen, so that meets that requirement. Dining room, living room, so that means the main living area. Half bath, bedroom, 1 full bath. It looks like a master. Bonus room, another bedroom. There's another full bathroom right there. Once you're done with that, there's another bathroom. It has 4.5. So I got all my bathrooms. There's another one. Like 4.5 bathrooms. And then comparable 1, comparable 2, comparable 3, comparable 4, comparable 5, and comparable 6. Again, if you had a fence where you could not see the property, you would have to condition for a copy of the MLS. In this case, we don't have a problem. So that's it. We're done with the appraisal. So then once you do that, this is basically, completing your RECACO and putting all your information on your RECACO that we did. Which, we started at the very top. We already did our, HOI, how we got our HOA, how we got our taxes, the LTV, how we calculated it. We mentioned that the appraised value of the purchase was the same. That's what we divided it by $900,000, so 80%. We talked about our DTI, the income, we showed how we calculated it. The only condition that we had, obviously, since it's self-employed, and we don't have, is we need a year-to-date P&L and a balance sheet, right? For any town research, for John's Schedule C. Right. For credit, we looked at all the major derogatory credits that we had. We conditioned for the tax lien. We conditioned for the housing payments and the LOEs for all the delinquent accounts that we saw. And we added the 125 that we saw in the pay stub to our liability. And for assets, we calculated this. We took it diversified, multiplied it to 70. We took out the margin loan, and that's how we come up with the amount minus the tax lien because we got to pay that. We conditioned for another financial month because we need 2 months, and proof of the liquidation because you got to liquidate the stocks. For our collateral, just the prior sale transfer, documentation supporting the increases. We only have 1. There's no adverse conditions. Subject property is listed for 950. The appraisal transfer on 518, 517, where the appraisal only addressed the most recent transfer. We need the other 2. And then once you do all that, put your recommendation. The recommendation is decline. Based on the information we have reviewed in this practice, the file will be a decline. The loan does not meet the program guidelines. Obviously, the DTI exceeds the maximal allowed, and you have major derogatory credit. Major derogatory credit, we're not allowed to give, give a decision on a loan with the major derogatory credit. And it's major again because we have several 60 days, and we had that it was one that was 90 that had a balance of over $5,000. Pretty much it, guys. We're done with this one. Any questions? Any questions at all? have it.
I have a quick question. What about on the, I know that we'll review the flood cert for the determination and the zone. What about on the appraisal, like if you made the determination that it was not in a flood zone, but he doesn't have what zone it is in?
In real life files, in those cases, I would just make a comment that the appraiser doesn't indicate the flood zone. However, we have a flood cert in file, and the flood cert trumps or supersedes what's on the appraisal at any rate. So I'm not going back to the appraiser to have him correct it.
Okay, and then what about for test case scenarios? It's like for this one, I wouldn't have been able to answer that question.
Your test cases are not going to have that. You're not even going to have a flood cert in the file.
All right, awesome. Thank you.
Mm-hmm.
And it tells you right here, this one tells you that it's not in a flood zone. Right here. No. So this one definitely clearly says no flood. Alright guys, so let me find, number 3, or business case 2. Found that for you.
Excuse me. Sorry to interrupt. Hello, this is Dewey. I'm still having issues with the week, the calculation itself. I didn't get the mail. The mail you sent to me, it was not there. So I couldn't use the week to calculate the self-employed. I don't know if you could send it to me, then put me through on how to go about it, because I'm not getting it.
Who is this? This is Olin Booby?
Correct.
I'm sorry. Who is it?
Hello, Olubumi.
Okay. Well, you don't have access to the WIC yet.
No.
I'm going to be sending out an email to Darren to have him request access because you just completed your compliance courses. So there's a few of you I'm going to be asking access for.
Oh, okay. Because I was wondering whether there was something like that. This is Noella.
Okay.
Hello.
Yes,
I checked on the week on Friday to see if I can find it on the email, but I didn't find it.
Well, you were just requested on the 3rd. It takes 3 to 5 business days for you to get access.
Okay.
But we've done 2 already, so I've done 2 tax from the very beginning to the end, step by step for you guys, so you should be, kind of familiar with the tax and the WIC, because we did both already. We'll do more. We still have one more to do.
And we're going to go through it too at Sassy Prep. By that time, you should have access to it.
Let me find case number, practice case 1. Send you guys an email. Bear with me. And you already have the solution. I just sent you you should have the answer template or the Rekeiko for this practice case 1. That way you guys have it, see it, get the answer from there, in case you missed something.
Juan, I need to sign off. I have to get on my other conference call.
Yeah, I got a 1 o'clock conference call, so I gotta go. Yeah, me too. But I'll go over real quick. Yes.
All right, I'm going to go ahead and hang up.
No worries, son. Thank you. Alright, so I just sent you practice case number 2. Let me find it here. Get a copy of it already. Might take a little bit for you to get to case 2 because it has a lot of documents. Alright, so here's practice case number 2. This is the last one that we have to go over it. So this practice case number 2, you still have all your documents as always up here. It gives you the link to the case. For this case is Mr. and Mrs. Doe. They're applying to refinance a rate in terms of their home. Refinance to reduce the rate of their home. All the documents you have them up here, and basically all your links that you have available for the file. So same scenario, start with your 1003, go to the credit, go over all the documents. So again, it's just Jane and John, and what you have here is a refinance. This is a rate and term refi of their home. Alright, so it's now 1 o'clock. So you have the rest of the day to complete this case. And then what we'll do is we'll touch base tomorrow at 9:30 Eastern Standard Time to go over it. Just remember to send your Rekeiko, the blank Rekeiko template that we have attached here for case number 1, and then for this also case number 2. Send it to Linda and myself. That's how you're going to get credit for this practice case. Alright? So we'll get together again tomorrow at 9:30 Eastern Standard Time. Will be 8:30 Central, 7:30 Mountain. So 9:30 Eastern Standard Time. I'll repeat it again because people still ask me, what time are we meeting? 9:30 Eastern Standard Time. Any questions? Alright guys, fantastic. I'll talk to you guys tomorrow at 9:30. Thank you. Let's continue to work in this case for the rest of the day. Thank you guys.